All right, here we go. Going live. Hello everybody, welcome to Trader Merlin Show. Hope you had a great trading session out there. As I can see from the text chat, yes, most of you probably have figured out that I did have a great day. And it's not because of anything market particular other than just Elon Musk. So thank you, Mr. Musk. I do appreciate you giving myself a 15% pop on the heaviest weighted cryptocurrency in my portfolio. But we'll talk more about that today because we're going to talk a lot about Forex and currencies with David Warner. But we're also going to talk about something that Dave and I talked about before the show, which is the future of money. For those of you who have met my guest before, you know that he makes his living on trading currencies. All right, right now he's super bullish on the pound, but it was the yen, and he migrates around to whatever currency pair does best for him. And the topic du jour kind of is in that realm. It's currencies, but it's actually kind of digital currencies. David Warner is joining me today. David, how you doing?
I'm doing well, Merlin. Thanks for having me again. How are you?
I'm great. I'm great. Every time you're on is great because you do tons of analysis for us. But I want to get your take on this because I think Brendan, who's one of our regulars out there, and by the way, hello everybody. I didn't get a chance to say a shout out to all your names, but my regulars out there, anybody new, do me a favor, hit that subscribe button so you become a part of our regular group here. But thank you guys for joining us today. Anybody knows David? He's very structured, very methodical, and over the years, I know Brendan. Every time you're on, he's always saying, "Hey, Dave, are you in cryptocurrencies yet? Are you in cryptocurrencies yet?" And I'm starting to see, not that you weren't resistant to it, but you're a spot guy. This is what you do, and all of a sudden now it seems like, if I'm not mistaken, that might be dropping a little bit, and you're venturing into the crypto world.
I'll tell you, it's definitely caught my eye, and I think it's really just more of even what's been going on this year, and even really with more of what's going on today. I mean, Elon Musk, as soon as if he's stepping into anything, and you already heard other institutions were kind of starting to look at it. And, as soon as you have, people start promoting it like that, then you kind of do have to pay attention. I'd be a little nervous, like me, just kind of jumping into it, like right at this price right now after it had what do we move today? Like 13, 14%?
Yeah, 14%. Yep.
Yeah, which is crazy. But it is something to, I think I'm going to pay more attention to. It's up 130% in the last 3 months. Bitcoin is always like it had this like, it was basically, I feel like it was trying to be sold to people as almost like a safe haven on some level, but it just really hasn't been acting like that. It's like kind of been a very a pro growth, kind of a high risk, kind of asset. Sure. And I think that's what's causing a lot of this to move up. But
So let me run something by you. Obviously, we'll look at several things here, and one of the things that most businesses are doing is carrying a lot of cash. And for those of you who would like some of the numbers, you heard today that Elon Musk made an announcement that they bought $1.5 billion worth of Bitcoin. Now, that obviously is a tremendous amount, but they have $19 billion in cash on their balance sheet, so they could technically buy a lot more. But what it tells me is this. You saw this with MicroStrategy, and just let me bring up the chart of MSTR, guys. MSTR now, I believe, is close to $3 billion worth of Bitcoin on their books. Here is the chart, which doesn't look anything interesting on a 5-minute, but if I go to a daily, you could look back a year ago, this thing was at $100, now it's at $1,000. So to me, it's very interesting to see these companies, instead of keeping dollars on their balance sheets, which we all know the Fed is just printing and printing and printing and printing, and there's no end in sight there. It's constantly devaluing that US dollar. So at a certain point, you got to throw your hands up and go, what's the dollar even worth? It's no store of value, if you will. You're constantly deflating the value. Now all of a sudden, MicroStrategy is putting some of their assets into cryptocurrencies and Bitcoin. Elon Musk today, to me, this was a major one because now, if you look at other companies, I think they're going to start taking note. As the audience knows, I've been saying darn well that the reason you're seeing this move up in crypto is it was a retail started asset class, and institutions are just now getting in. And just to put it into perspective, Tesla has $19 billion in cash, and they put $1.5 billion into Bitcoin. But Google has $136 billion, Microsoft $131 billion, Facebook $61 billion, Amazon $76 billion. Amazon is $85 billion, and Apple is $76 billion. That's about $508 billion in cash. And if just 10% goes to Bitcoin, you know, these $100,000 price targets will be seen by the end of the week if they decide to rotate. But as a business, Dave, talking about dollar as the new, you know, kind of the new currency here going into Bitcoin, what do you think of these companies now, instead of holding dollars, starting to hold cryptocurrency assets? Does it kind of throw shade on the US dollar as the reserve currency?
I think it throws shade on the U.S. dollar as a reserve currency, but it's going to take a lot to dethrone the U.S. dollar as a as the reserve currency. I don't know how long it would take, or what kind of catalyst we would need to see that. But it's like, you know, I could see, like, in smaller countries that are very unstable, have very unstable currencies. They'll probably adopt cryptocurrencies much earlier than the United States will. Currencies that have pretty much a stable currency from economies like the United States, Europe, and Japan. I think it would take a lot longer for it to be kind of utilized as an actual currency. Elon Musk has kind of he has a little bit of a one-up where he just did announce today. I think part of the rally is, at first he did invest in Bitcoin, and then he did say, well, listen, we're going to accept payment in Bitcoin someday. But one of the things that he has that kind of goes for him is he doesn't sell his stuff like through dealerships. He just sells it directly to the retailers. So he can sell his cars or whatever it is he sells directly to consumers when he doesn't have to go through a dealership. I think from what I understand, that helps him out big time as well.
Yeah, I think it just, to me, kind of revolutionizes his model a little bit, and it shows that there's a belief in the cryptocurrency itself. So, you know, it was kind of impressive today, because you don't see him putting his balance sheet in Dogecoin. If you guys have been following, he's just been, you know, shamelessly plugging Dogecoin almost every single day in his Twitter feed. But, you know, to me, watching now all of a sudden one of the major players in the financial space, major S&P 500 company, now jumping on the bandwagon and saying, you know what? We will park some of our assets in cryptocurrencies. And my guess is you will probably see more companies do this. Again, I'll bring that chart of Bitcoin up here so you guys can see that one. It was pretty impressive today. But at the run, that's MicroStrategy. It was actually 18.95% today. Thank you, Elon Musk. And you can see the volume significantly higher on the futures contract, all-time highs for Bitcoin. And, you know, at this point, it's anybody's guess how high it goes. But given the fact you have more and more people buying into this and putting on their balance sheets, it does really bode well for a much, much higher price appreciation. Now, the other question here is, as David and I were mentioning earlier, is the future of money. Now, you know, I think I caught from your last comment there, Dave, that, you know, I think it'll take some time for central banks to catch on. What if this surpasses central banks? What I mean by that is this. Bank of Japan, US dollar, euro, British pound, they're all going to go to a digital currency. It could be 3 years, 5 years, 10 years. At some point, it just makes sense for everyone to have a digital currency. It'll probably be on our phones or digital app, because I no longer want, I'm afraid of COVID or some pandemic. I don't want to touch money, right? We'll just swipe or scan something. How do you think that's going to impact? I think those will take a long time for them to catch up to where these crypto markets are right now. And it makes me wonder if you're going to see heavy regulation, because they're fearful that this is all of a sudden going to start to take over. I mean, is it going to be illegal for companies to have, you know, crypto assets on their balance sheets now in the U.S. because of it? I mean, what's your take on adoption versus fiat?
That's the great unknown. I mean, we already, for the most part, deal in digital currencies. Most of the transactions that are being done are through debit cards and ATM cards, credit cards, things along those lines. So it's like, and most of the money in existence is digital. The thing that's kind of has separated like a Bitcoin is that it's a fixed asset. And I think one of the reasons that it's done so well is because it is finite. And when you have these kind of low interest rate environments, so your money's just going to flow into the things that we just can't create more of. We can always create more US dollars. You know, in order for the dollar to be replaced, we'd have to completely lose faith in the United States dollar. The US dollar is still, I mean, most of the world's debt is held in USD. Even look at, like, if you look at just the way that transactions, like Bitcoin, just the way technology is right now, I mean, just because of the way that it's tracked through those ledgers. I mean, how many transactions can we do a second? Like 7 transactions versus like 24,000.
Yeah, you're right. But I think what will happen, you will see, as this becomes more accepted, there will maybe be a transition to projects, or, you know, Bitcoin's not going to really all of a sudden become a high transaction thing. That's really designed to be a
Right.
store of value. But you have other ones. You know, Ethereum is like, what, 12 seconds or something for that. You have EOS, which does way more transactions than anybody else, and they're also very quick. You have Ripple's a couple of seconds. So there will probably be a development of multiple segmentations. There'll be the currency one where I can go swipe and get my mocha latte, and then there'll be the Bitcoin side, which is store of value. But boy, it almost feels like the central banks, by resting on their laurels here, are letting the mainstream markets all of a sudden bring crypto to the forefront, whereas before I think they could have crushed it before the companies got in. Now institutions are getting in. It's hard to reverse that trend.
I've never really seen anything like this, and I think that was my hesitation on even really looking at these for so long. But I mean, it's highly speculative right now.
Yep.
I mean, like, people aren't necessarily buying it as like a utility or store of value. A lot of the people that are buying it right now, there's a sense of FOMO.
Yep.
You know, I have the opportunity to you know, kind of meet people for the very first time that are entering into the financial markets, and I can't tell you how many people recently have come up to me and said, well, you know what, I just bought Bitcoin, I just bought GameStop, I just bought AMC. They're buying all of the things that we're just reading about every single day. They're not buying anything other than just like it's like a lottery ticket. You know, I appreciate Elon Musk, you know, for he's kind of like a double-edged sword to this, because like, while he's drawn this attention and he kind of caused these Bitcoins to move like this, he's bringing in a lot of these really unsavvy retail traders that will just take all the money that they really have and they'll just put it all at risk into something like this. And we all know that these currencies are very volatile. These stocks are very volatile. And it's like, if they're catching things at tops and bottoms, you read some of the comments on Elon Musk's tweets, and it's like, Elon, you know, this is irresponsible. I lost half my money. Can you please buy Dogecoin so I can get my money back? You know, all that kind of stuff. So if you're going to put money into this, you got to be comfortable with like, okay, I can lose a lot of whatever I'm going to put into this very, very quickly.
Mm-hmm.
But I'll share a Bitcoin chart with you. I'll just kind of show you, you know, just kind of the ways in which I was kind of. Hopefully this is showing you Bitcoin USD. It's just like a 1 week chart right now.
It's so funny you say, oh, it's just a weekly chart, but I'm looking at the low price axis. It goes from 0 to 50,000.
It's insane. Like, I know, it's so insane. And I just like, I look at these numbers like right here, and you're just like, I can't remember anything I've ever seen perform like this. No, I can't. I don't know anything that's performed like this over even just like the last 3 months, unless you caught, you know, crazy tech stock. But anyways, you know, with something that's just so expensive, I started trying to like break this up. I added some of these numbers here because it's something that's so expensive. I know typically like to kind of look at things in either kind of a whole number, 1 to 2, 2 to 3, you know, whatever, 10 to 20. Yeah, we've talked about it in past. But, you know, I was just kind of looking at this Bitcoin, you know, basically $2,500 at a time. And, you know, it's obviously not a perfect system, but, you know, this whole day is like when it kind of crosses above 1 or below 1, does it get to the next? And, you know, we just kind of hit these when you're kind of making kind of new all-time highs and then trying to figure out, well, kind of what's the next hurdle. You know, I was just, you know, kind of looking at this one. I don't know if it's like we hear 4250, above 4250 to 45, above 45 to 4750, 4750 to 50 grand. But it was kind of from what I can see, kind of an interesting way to kind of break it up, because I've always just been more of a, you know, like we've done it before. It's kind of like a price to price. And,
that's the challenge we always have when something's at an all-time high like it is, you know. But I think what's interesting is in looking at the price chart there, you know, one thing that does reign true, and hey, Don, I see we got Don Fron with us today. Good to have you. You know, one of the things that reigns true in any asset class, whether it's Forex, whether it's equities, it doesn't make a difference to me. Whole number psychology plays a huge role. And you notice that a lot of those lines that David has on his chart are drawn right around those. And there definitely is a gravitation towards it. I think that the challenge here, which makes it a little bit different than traditional trading, is my belief, and you guys can correct me if I'm wrong, I believe that at this point we're still seeing an asset class that is predominantly driven by retail traders. And I think that shift is happening to institutional. But, you know, when we're looking at supply and demand methodology, from my perspective, the reason that prices turn are because of an imbalance between buyers and sellers, and usually that's reflected more because of institutional buying. And I think as we get the Elon Musks in, as we get the JP Morgans and all these firms in, we'll start to see the adherence to this kind of whole number psychology or price breakdowns like you do. It'll come through much better, I think.
Yeah, it's just a way to kind of break it up. I mean, obviously, with something like a Bitcoin, just the way that the price action has, you kind of get into this, well, always be buying maybe type of mentality. And it's like, if I was even just kind of looking, if you're not just going to be this buy and I learned a new term here just over the last few days. I don't know if this new buy and hodl. That's when I was reading about these cryptocurrencies.
You want to know the origin of that?
No, what is it?
You know what it means? So it's kind of funny. So it's a couple things. So first off, there's two beliefs on here. Who knows what the actual thing is? But it's almost like, coming up the idioms like riding shotgun. HODL, HODL, was apparently somebody in one of the chat groups he was typing in that he was going to hold it, and he typed it backwards. So instead of HOLD, he had all caps HODL, and they were laughing at him, and then it became HODL. The other one is, it's an acronym for hold on for dear life, which is very appropriate in the crypto space.
That's what cryptos to me really is right now. And I think, I've just played it so safe in, regular fiat currencies. It's just they obviously it's not one of these things that are going to appreciate or depreciate 14% in one day. And if anybody's kind of more on the risk adverse side, I mean, cryptocurrencies isn't really this is just, my opinion, it's not really something that people are trading. You know what I mean? It is like, it's like, I'm going to buy and I'm going to hold on for dear life, and then just hope, I don't have it at the next, meltdown or whatever it is. You know what I mean?
Yep.
But so it's not really, and plus, it's tough. It's I don't know how tradable it is, more of just like buy and hold on, but the price points are pretty interesting. Even if you were trading with stops, if I had $2,500 in between both of these, you got $250 stops, you got 10 to 1, $500 stops, you have 5 to 1 risk to reward. And I was just kind of going back and I was just kind of playing, if I only took buys, how would I be doing? And I wish I was only taking buys.
Well, the good news, it's a little harder to short the crypto markets, but you're right, and I think that's part of the reason why we're seeing this continued trajectory upwards. It's people like Brendan and myself and several others in this group. We're buying holders, and I'll talk about the Ethereum choice that I made on Friday. I told you guys I actually sold out all mine on Saturday, but for the most part, I'm not touching my holdings. It's that piece of, I'm going to take those assets, I'm going to throw them on my Nano Ledger S's here and keep those in my hold. And when you do that, you're essentially removing them from the supply. So you have all these new entrants who, I agree with you 100%. One of the major problems we have right now is the FOMO aspect, whether it's GameStop or AMC or Bitcoin. It's hard to look at something that moved almost $6,000 today straight up, and be like, what if I just had one of them? I would have made $6,000. Yeah, but you get caught as this thing drops as well, like it did back in 2017 some other time. So interesting stuff. Let me see, I have some questions that came through here. Let me real quickly. Interesting. I don't know if you know the all the mechanics of it, but if you don't know this one, that's fine, but I'll read the question if you want to take first stab at it. Medic Mandown says, at some point, Bitcoin will have all the Bitcoin mined, so what is the incentive to uphold the blockchain?
I always had questions on that too, and I was reading about that, and it's like, man, we already have 18.3 or 4 million of these out of like 21, but I guess it's not even till like 2130, 40 or
2140. Like, so we have 119 years. So bottom line is, we'll all be dead by then, so who cares?
We'll let our let your grandkids or great grandkids worry about that one. It's going to be, I don't know. It's uncharted territory for me as well. Just as a disclosure, I'm not ready to buy this just now. I'm going to stick to my to the things that I know. I'm not going to be like chasing this Dogecoin or anything along those lines. Even like with the Dogecoin, which is the other one, is like, even the person that created it was like, this doesn't make sense. I just read that.
Yeah, he was making it up as a joke.
Yeah, he made it up as a joke, and now it's worth like $6 billion.
I know.
It's unbelievable.
Yeah, so and Brendan's absolutely right, so I was going to let you go for that one. And Brendan's 100% correct. basically what we have is every 210,000 blocks of data, the reward for miners is cut in half. And this, to me, like if you took the cryptocurrency class, if you're lucky enough to take the cryptocurrency class at OTA before they pulled it, I brought this point up, and I think that what Satoshi Nakamoto, whoever it was that designed the emission curve for Bitcoin, absolutely brilliant. It's an architectural masterpiece because, in theory, it's going to continue to cut in half the reward for miners. And you're thinking, well, what incentive do they have? Well, if you go back, Bitcoin may have been 10,000 and they're getting, let's say, 25. Well, now it's 30,000 and they're getting 12 and a half. And you're like, well, they're getting less Bitcoin. Yeah, but they're much more valuable because the supply and demand curve is causing this thing to push up. So by the time we get to the smallest point of the emission curve, right around 2100, the year 2100, they might be getting 0.05 Bitcoin, but they could be $1 million a piece because it's scarcity out there. The real truth about what will happen in 2140 will be the reward. So you're still going to be paying transaction fees for cryptocurrencies to make the transactions in Bitcoin, and pretty much everything has some form of fee. That's what will be the reward, and they're going to be making pretty good money as people are hopefully much more accepting of the network, and there's a lot more transactions going on. So I think it's actually a fantastic, well-designed architecturally program. Let's see. Jerry says, question, do I have to worry about the Forex market drying up on liquidity the next decade and transitioning into cryptos, Fedcoin, SDRs? Jerry, that is a great question. Dave, I'm going to let you tackle that one.
I don't really see anything that we have to worry about anytime soon. The thing is that I think we are going to see a lot of volatility. Even just I can see the volatility already this year. And I think, even just a lot of what happens with, fiat currencies is going to have a lot to do with just like, the stock market. I wouldn't even really start worrying about fiat currencies. I really don't see that, to be honest. If that ever happens, I mean, I'm going to be making my living by like holding a sign out on the highway, like we'll talk about with the way Forex used to be.
I think you'll be fine. I mean, knowing you'll switch into trading the currency pairs. Crypto stuff. So, Jerry, I don't think you have anything to worry about, especially, the U.S. dollar is not going to disappear. As much as I talk trash about it, and so does others in here, you will see maybe more money flow into the asset classes, but the Forex market's the largest in the world. It's going to continue to have its liquidity. Countries will still need a fiat currency. The interesting question will be when we do start switching to a Fed coin or go full digital currency. I think what you'll get is what I have here on my screen. I'll bring it up for you guys. This is Coinbase Pro, and if you notice, they have a list of different currency pairs here, and they're quoted exactly like you would trade spot, right? You would trade the euro dollar or the British pound Canadian dollar. Here's Dash US dollar, EOS US dollar. You can go here. There's even cross pairs on some exchanges, but for the most part, it's the exact same nomenclature structure. You've got your base pair, you got your quote pair. So I think even if we do get to that point, it's about understanding how to trade, and you'll just simply move your knowledge from trading a spot Forex market if for some reason your fiat currency pairs start to lose some volume, and then move into the crypto assets. We don't know which way it's going to go. I don't think that in my lifetime you'll see it fully disappear where like no longer there'll be dollars. I think they'll be pushing for it to go digital, and then we'll just trade those markets. So it's something I certainly wouldn't be worried about going forward. All right, Dave, what do you got? I see you pulling up some S&P 500. What do you got?
Oh yeah, I didn't know my screen was still up. It was just the same thing. When you kind of talk about markets, kind of again, just continuing to hit all new all-time highs. It's just the way I was kind of looking at breaking up the S&P 500 basically, and just these like looking at it in increments of 25, and just kind of playing it from there. But it's like, as long as I honestly do feel on some level that the S&P 500 and what's going on with Bitcoin, just in my opinion, are somewhat related, because they're both just like, it's just risk on, risk on, risk on, risk on. And I honestly do feel that when Bitcoin runs into trouble, it might be a little bit when the S&P 500 runs into trouble as well. But they seem to kind of like S&P 500 obviously isn't moving as like Bitcoin is, but a lot of just like the timing of when when it kind of when it's up, Bitcoin's up. When it's down, Bitcoin's down. And I've been kind of noticing it doing it a bit of that. And I don't know. I wouldn't look at Bitcoin right now as a safe haven, because it hasn't really been being treated like that. You know more about it than I do. That's what I've been noticing about it, just the way that it's moving.
Yeah, I mean, there's always the question about, will this be, replacing the dollar? The answer, guys, is no. In my mind, it won't be replacing the dollar, simply because it misses one very fundamental piece that the dollar offers, which is a stable store of value. I'm watching something move 18% in a day. I'm pretty sure if you were holding US dollars and it moved up or down 18% a day, your attitude might change a little bit on this. So it will never, I don't believe we'll actually get to the currency point, but there's a good question here from Rob. He says, what's the difference between digital central bank currency and the currency use of things like debit cards and other non-cash transactions? There really isn't a difference. In my opinion, certainly Larry says profit. Yeah, you have Visa, MasterCard adding a ton of profit on it because they're charging 3.5% or 3% to merchants. But what you would have is simply a digital electronic system. What you should be more concerned with is, what are you giving up, right? If you're using a Fed coins, let's assume 10 years down the road, there is no more physical US dollars, no more change. It's all digital. So if you don't have a device, you can't communicate. It's also a ledger that's tracking everything that you do. So everywhere you go, everything that you spend on, whether it's a pack of gum or anything, they will know your data. And you talk about Google having access to all your data. The Fed would probably be the most powerful data broker in the world with regards to consumption patterns. Kind of an interesting shift. I'm sure Google would have a lot to say about that.
Oh yeah.
What other questions do we have out there? David in the corner wearing his members only jacket, remembering the good old days. I like that. All right, I'll go to some cryptocurrency questions here after I'm done with David, but I want to go into maybe current markets. I know last time we had you on the program, you were really big on the British pound.
I still am.
And rightfully so. It's been doing phenomenally well. I'll bring up the chart here for us. You have it's smacking its head up against, not all-time highs, but a more recent high that we just achieved a couple weeks ago. What's your take on that British pound now? Are you still really bullish on that thing going forward?
Yeah, I'm still bullish on it. And they just basically, their last central bank get-together, they basically kicked any form of negative interest rates down the road. I still think this is the currency of this year of 2021. I think it's just going to continue to move up. The next hurdle here. Are you looking at my screen or
Yep, I got your screen. Yep.
Yeah. So the next one in here, I mean, you have this 3750 is the next big hurdle. If I can get above 3750, that's going to be basically the run to 140. Now, a lot of it's going to have to do with the dollar, because the dollar is getting a little. The dollar has been so weak for so long that the idea of it having some type of short-term correction, I wouldn't say a major change in trend, could make a little sense. But if we see continued dollar weakness, 37.50 to 140, if it continues to drop, I probably wouldn't start trying to buy it until it gets back above 37.50, or basically takes a ride down here to the 35. But
Keep it there. Keep it there real quick. I want to go to it because Medic's like, yeah, British pound seriously just hit the 137.50. Yeah, it did. And, it's, if you look at it, it's been the past few days. It's just been smacking its head up against that line.
Yeah.
And this is where you have to practice patience, which is probably the most challenging thing to do in the financial markets. And, you could do one of two things at this point. Well, three. You could sit in your hands and just wait for the breakout. That's number one. You could be selling the British pound US dollar right now. That's number two. Or you just do nothing. So, or buying right now. I think it's going to break out. And I'm in the camp with David here. I think that logically, you look at this trend. My gut tells me it's weakening a little bit. I know you probably don't hear that because you're the long and strong on it. But it's the first time that we've seen sideways consolidation for more than 2 weeks in the British pound in quite some time. So it feels like it's getting a little bit weaker here. My active forex trading day would say, I'm going to go short that British pound right now at these current levels. And if it breaks above, the 138, then I'm out. Give myself a 50 pip stop.
Easily be a play. I mean, I'm just like, I get into these, I only buy or sell something. I'm not very good trying to play both sides of anything. So I form biases and say, well, I'm only going to buy, I'm only going to buy, I'm only going to buy. And this is just one that I've just done that with. And so if it kind of falls over, maybe sometimes I miss out on, on some type of move, but I'd rather, I do better, just saying I'm only going to do this than try to do both. But it's in, the pound is one I'm still interested in. I haven't really I've been a little bit more nervous around dollar crosses. I got into another Euro USD. This is a little bit of a dangerous one. It's like it's dropped off, but this is like I always wanted like 20 to 25 or 20 to 22.50. This would only be a buying spot too.
Mm-hmm.
I have these like little spots in the middle where it's like, kind of are a little bit more like, so if it drops through here again, I can try at this would be the next price below 120 that I would attempt it on. Even if I attempt any one of these, I'd probably try to go for, it's at least 250 or 500. But it's like, if it continues to drop, I've already bought here. I'm in again here, 50 pip stop. I have an open target, but my ultimate goal is 125. If it doesn't go here, I got another shot here. That doesn't hold, another shot here. But it's like, just price points. That's how I've done it, but that's it.
Yeah. Well, I mean, what I like about it is you have, your it's to go with the trend, right? It's that trend is your friend with the bend at the end. And I know it's such a cheesy slogan, but you've got this euro on an uptrend since April, and it's by the pullbacks. And I think right now that's picture perfect for what it's done in the past. Is you've had that accelerated rally, now you have that little reprieve sell-off into a demand zone. I like it. And it's funny because you go whole numbers, I would have gone a little bit lower to that demand zone. I think you got a little bit more, 119.
Right, I see what you're saying. But yeah, that's what I did. That's where I'm at. I was so close to getting stopped out too. I was like 3 pips away from getting stopped out, and now I'm in the green again.
Yeah, I know. Well, good. We like being in the green.
I know.
Richard says, would you say that all currencies are being manipulated by the vaccine for COVID? I don't know if I'd say they're being manipulated by the vaccine. I think our government policies are being manipulated by the vaccine.
Yeah, I agree with that. I agree with that last statement you said, big time. But I think, it's the dollar has weakened so far so fast that, a lot of these other central banks are starting to kind of really pay attention, because really no one really has a strong dollar currency. We've always on kind of like a race to the bottom.
Yep.
And if I looked at like the dollar index, the dollar index you look at where it is today from kind of where it was at, kind of when we started to just say, money for everybody. Money, money, money. You all get money. Who wants money? You get money. Kind of like Oprah when she was giving away car, like kind of that same mentality.
You get a car. You get a car. You get a car.
And so, the idea that the dollar could have some type of correction, just like what they're calling with the stock market. You go on Bloomberg, you go on these websites, and you're reading countless articles how like, a 10 to 15% correction, is not out of the blue. They're not calling for market crashes, but they're calling for corrections. And it's probably not a matter of if, it's just a question of when that correction starts to come, that same correction is going to ease its way over into US dollar strengthness. No one wants to try to call the top of a stock market, because anybody that has probably been, you've been hit if you keep getting knocked over, you know what I mean? So It's like you can't really predict it until it just starts to happen.
You're on the dollar. We've got that pretty aggressive downtrend, obviously, for the better part of a year now. We've talked about this a bit. What's your take on where it's at now and where you think it might be headed? Because, it could go anywhere, really.
Yeah, it really could go anywhere. And it's like the way that something like this, I can count this like basically, it's almost like I keep using this. Oops, I'll put these, had these kind of up there. This would be like a little bit more of an aggressive way to look at it, where essentially you're just kind of like counting by ones. And so it's not necessarily, nothing's obviously perfect, but it's like if I can get above or below 1, the idea is am I going to go to the next one? I looked at this when we got above 91. I'm like, okay, 91 to 92 or 92.50 is where I was thinking it was going to go. But the idea is that we're starting to creep back below here. And the stock market was hot today. Now I don't know if the stock market continues to be hot, that's where this is going to go. But if the S&P starts to kind of, if the legs start to get shaky, I would start just aiming for, even if you're aiming for it with like counting by ones, if you're trying to do it a little bit of a shorter view, or it's like you're counting by these like 250 increments. So it's like 90 to 92.50s, which I originally where I thought I was kind of thinking we were going to go, but it kind of fell back below 91. So I don't know, but it's very simple. I'm either typically counting by ones or counting by some type of quarters.
Okay.
Ones, count by ones, count by tens, count by hundreds, count by 25 cents, $2.25, 25 points, 250, 2,500, like we were doing on crypto.
Bitcoin. Yep.
At Bitcoin.
I'm going to show you, so you can't see my screen, unfortunately, David, but I'm going to share with the viewers out there. This is, it's kind of hard to see because of colors, but I took the dollar index, and I basically just, what I drew, David, is an inverse head and shoulders starting from the December, like right around December 10th, and then you see the left shoulder around December 17th, you route up to the neckline, which is right around almost 91. An interesting picture here, guys. We've talked about patterns before in the past, and I'm bullish on the US dollar right now, believe it or not, just because of the picture that's forming here in that most recent dip that we had in January, January 22nd. We didn't even come close to making a new low, so that gave me a little bit of hope that there might be some stability, and it made this pattern that you see with the light blue lines of an inverse head and shoulder. Now, right now, you're looking at a breakout, which is great from the buy point. We talked about there's two ways to enter these types of patterns. One would be buying the breakout, which if you did, great. The other one's being more conservative and waiting for that retest, which is doing, as we speak right now, retesting that line. So this will be something probably the remainder of the week we'll be keeping an eye on to see if it in fact does get some legs underneath it, move back to the upside, or starts to challenge those lows around 90 and then ultimately maybe even lower than that. So just wanted to draw that one in there for everybody.
Cool.
Yeah.
I'll have to check out your recording, but I kind of see, I think I'm drawing something on my end. I don't know if it's the same thing.
Dave went to art school. Yours kind of looks like a happy face, but it's okay.
I mean, I tried.
Yeah, no worries. All right, let's see. I got a couple questions in here. Larry says, do you take the Dixie or VIX into consideration on currencies? So dollar index and VIX, do you use those in your world?
Not really. I mean, this is a trading platform that I probably look at the most when I'm home, but it's like I don't look at the dollar index that much. I'll look at it every once in a while, especially when I do like kind of shows like this or I'm in a classroom online. But really, I'm looking at the Are you looking at my screen right now?
We are now.
Okay, cool. All right, so I'm just gonna go home here, and I'm mostly paying attention to what is going on to the S&P 500. I have the dollar index right here, but typically if I see the dollar index, or excuse me, the S&P 500 when it's up, typically I'm just assuming that the dollar is down. And then if you really just wanted the biggest kind of the currency that's typically the most related to this would be kind of the Euro USD. The dollar index is basically 60% Euro and Euro related currencies. So whatever the dollar index is doing, typically the Euro's doing the opposite. But I don't really look at those to kind of figure out what I want to trade. Most of the S&P 500.
I do. I like to look at for some reason I use the dollar index is more of my benchmark. So I'm using the dollar index, even though it's got the Swedish kroner in there, right? Like, no offense to my Swedish friends, but not exactly the powerhouse currency dominating the world. But
right.
Let's see. Someone was asking, as Medic says, USD Swiss franc is like Fight Club. We don't talk much about Miss Swiss. I'll tell you, the last time I traded the Swiss franc was in 2015. I can tell you why, because in 2015, in early January, they unpegged to gold, and all of a sudden, it just had one of the sharpest drops I've ever seen in the trading world in a very short period of time. So ever since then, for some reason, I just said, meh, I don't care about the Swiss franc anymore. Are you a Swiss franc guy?
Hell no. They're the ones out there that have been accused as currency manipulators. And I worked for a company that almost went bankrupt when they did that. So, yeah, not a fan.
I'm actually bringing it up here, so let me see if I can bring the picture for the viewer. So Jerry says, I knew an OT instructor got a margin call on the Swissy when they pulled the rug 6 years ago. There it is. This is a weekly chart, guys, and it went from 1.024 all the way down to a low of 85. I mean, you're talking over 1,500 pips in a day. That is an unbelievably monstrous drop in price. And if you're on the wrong side of that, it fell so quickly. There's not much that you could do, unfortunately. That's one that it just...
And there's no warning.
There's no warning. It was a once-in-a-lifetime thing. If you were short, it was the greatest trade you've ever made. I mean, you thought GameStop was good? Leverage 50 to 1? This is way better.
No, that's true.
But you don't see no Reddit group talking about that one because they were not controlling it. All right, Alan really wants me to talk about this one. Alan, I'll get to it. He says, does British pound USD weakness necessarily mean dollar strength? Don uses Dixie as the underlying to trade Euro USD.
I mean, my assumption is that whatever the dollar is doing against one's currency, you're typically assuming that it's doing the same thing across the board. So whatever direction I take on a Euro USD trade, say I try to buy it, the only type of trade I would want to take on any other dollar cross is something that I'm basically, in that case, I would be selling dollars. So if I'm buying Euro USD, the only thing that I would look to do with pound USD is buy it. If I have one that I'm buying and one that I'm selling, I'm kind of like rooting against myself, where I want the dollar to do well against one currency and the dollar to not do well against the other. So I was overall bullish, the euro and the pound against the United States dollar. I just felt that there's been a lot of like money just sitting on the sideline waiting for kind of things to get figured out with Brexit. And now that Brexit is, there's going to be some hiccups when they still try to figure things out. But for the most part, I feel like those two currencies should outperform over the course of the year. The amount of stimulus that we're putting into this economy, that's where I think they're going to go. But you never know.
Alan, it's interesting on that one. If you look at, so when you hear like, British pound US dollar and you say it's got weakness, in your comment was, does it USB weakness necessarily mean dollar strength? No, it doesn't. What it just means is that the dollar, for whatever strength the British pound or weakness has, the dollar is performing slightly better. What I mean by that is you could have the pound rising, but the US dollar rising faster. Then the GBP USD is going to go down. Right? It's relative to another. You could actually have the British pound falling really aggressively and the dollar's just slightly falling, then the British pound's going to keep falling. British pound could be going sideways and the dollar is just trickling to the upside. British pound's going to fall because relative to the US dollar, it's showing weakness. So I hope that helped a little bit. I could have some graphics here and visually convey that, but there you go. Larry says SPY or SPY futures. Totally a personal preference.
I don't really trade much either one of them that much. I just use it as a gauge, but typically I look at futures more than I look at anything else.
Yep, me too.
Yeah.
I like the futures because you get the leverage aspect to it. But if I'm trading options, my options are generally going to be off of the SPY or the ETFs that represent those specific indexes that I like to trade. So I love doing options on everything except the Dow. I don't know why. I just never was a big Dow fan, but I do Russell, NASDAQ, and S&P as well. Real quick, before we wrap up, I just realized the time is flying here, and I have a 3 o'clock I got to get to. You have a signature series talking about Forex. You want to tell our viewers about that briefly, and then we'll wrap it up?
Thanks for that. I have one. It starts tomorrow. I have one tomorrow. If anybody's interested, you can still get in. But it starts tomorrow. It starts at 11:30 a.m. Eastern. Goes to about 5 p.m. Eastern. We have one break. It's all online. It's recorded. We spend 3 days together. Price-based trading system. And then we do companion sessions every week where we go online together when we kind of talk to markets and look for ideas. But if no one can attend the one that starts tomorrow, I also have one that starts on March 9th. That would be available to attend as well. You can just contact your center and they can get you signed up.
There you go. I actually have it over here. If you want to know more information about that, you can go to tradingacademy.com to find out more about David's signature series. There is a prerequisite for that one. You have to have taken the Forex course. So, right? Am I correct there, right?
Yeah, that's correct.
Cool.
Yeah, I don't know if I'm giving away too much, but I'm trying to work on one that's non-currencies as well. So we'll see where I can get with that.
Ooh, well, you got to throw the cryptocurrency one in there. Really make us
happy.
I
will, man. I'll do everything.
All right, David, thanks so much for coming on the program today. I appreciate it. If you want to know more about the crypto world, I'm happy to get you in there, buddy. I think we got to get you fully committed.
Yeah, please. That would be awesome.
All right. Well, hey, man, thank you so much. I look forward to talking to you soon.
Talk to you soon. Take care, buddy. Take care.
Guys, that was David Warner giving us some insights into not just the spot Forex markets, but also the interesting shift we're seeing potentially with the digital side of the world. And I think that there's a lot of change going to be happening here. To me, it's very exciting times, really that future of money discussion about where we might be headed. And, we're riding that wave right now. It'll be pretty exciting times. We're seeing, obviously, a lot of pumping and dumping in the crypto space, but overall, some pretty nice moves, especially because of Elon Musk and his continual pumping of Dogecoin and Bitcoin now by holding it on his books. There was a question came through earlier. Oh boy, it was a long way back there. Someone sent in a question asking me about Ethereum, and I believe Josh. I think that was from Josh, and he was asking, if the Ethereum futures came out last night, and when Bitcoin futures came out, Bitcoin dropped 50% over the next week. And I talked about this on Friday's show, which just had me kind of thinking. I was like, you know what? I just want to take that risk. So I unloaded 100% of my Ethereum at 1728 on Saturday afternoon. And I felt good about it because you saw it actually dropped down to 1480. And it's like, why didn't you buy back in then? Because I basically told myself I'm not going to buy back into Ethereum until Friday of this week. I want to let it be a full week of the futures contract trading. The interesting thing is, there's almost no volume trading on that Ethereum future. Right now, it doesn't have much fanfare at all. I think it'll start to gain some traction. I mean, even the Bitcoin futures aren't massively traded. But I think you'll start to see some volume build up on that. But, yes, Don. Elon. Now he's my boy. He's in my corner. He's putting Bitcoin on his balance sheets, boy. I'm a big fan of Elon now. But, yeah, the Ethereum thing, it's interesting because for what the action I took, I was watching it on Sunday night. If you guys happen to check out Ethereum's price, it was dropping pretty sharp. Let me bring up, let's see if I can bring that one up for you guys. I got multiple platforms running over here. We'll just do TradingView. It makes it easy. Here is the TradingView side of it, and there's your Ethereum USD. I'm still in the money, I guess, because I was trading. I got out at, there's the daily. I got it at 1728. But you notice back here, last night, this thing hit a low of... Why am I not seeing the right numbers? These numbers look really weird. Interesting. Totally not. This is what chart is this? There we go. Jeez Louise. That's what we want to be on a 5-minute time frame. That's what it was. I was looking at a daily going back years. I'm like, Bitcoin was not that low. So here's your 5 minutes of Ethereum, and just to show you, if you go back to Sunday, we hit a low price of right around I think it was 1480 was the low, but it's not showing up on mine. But we were right around 1400 on it. That would have been another $228 per Ethereum I would have saved by buying back in. But I told myself I would wait. I was going to wait a little bit longer. So I will. I'll wait until Friday. I'll let you know how that goes. I'm not saying I'm going to buy exactly on Friday, but I will be able to buy back in. I'm going to be opening up to it. Oh boy, here we go. Yeah, I'm bummed. I was really, and sorry, Don, I was pulling for the Chiefs. God, I hate Tom Brady. But you know what? He did what he did and did a pretty damn good game. Actually, I think he did okay. I really think who won that game was the Tampa Bay Bucks defense. The Bucks defense was pretty friggin' awesome in that game. Anyway, I didn't really enjoy the game. Wasn't that great of a game. I don't know. I wanted highlight reels. I wanted a high scoring just shootout, but no, we didn't get any of that. Is Tom Brady the GOAT of GOATs now? Oh, you can't argue that he's probably the greatest quarterback because of his stats. However, when you look at the way stats were, it's like, you look at the way things were done back in the day. Let's say you say someone's a better fighter because, well, they've won 30 fights. Well, if you look back 10 years ago, they were just doing without gloves, and the guy only could fight 5 fights. But now he can fight a lot more because they're using padded gloves. Look, Brady has been pampered. He's been protected by the refs. Anyway, we won't make it a football show. I could totally go down that path. But yeah, sure. Why not? Give it to him. Let him have the greatest quarterback ever. All right, let me go to economic calendar so I can get out of here before we run out of time. And let's see. This is your calendar, economic calendar and earnings calendar for tomorrow. The 9th. Doesn't bring us too much. We had nothing on the U.S. docket for today. Tomorrow you have NFIB Small Business Index, which of course will probably be doing pretty darn well given what the Russell 2000 has been doing. We have JOLTS job openings and mortgage delinquencies. Love to see that number start to spike. That would be a little bit of pressure on our economy there. Other than that, not too much going on for the rest of the world. Earnings. Last week was really the big one, but we do have some big names coming out tomorrow. You have Twitter reporting aftermarket close, Cisco reporting aftermarket close, and then Canopy Growth, for those of you who are in that THC space, as I am, holding some MJ right now and Kush brands. They're reporting earnings before market open tomorrow for Canopy Growth, so we'll see those ones. Those are kind of the important ones. There's I think there's something like 65 different companies reporting earnings tomorrow, so make sure you check your earnings calendar so you don't get caught off guard with any of that. That said, I think that's going to do it for me. I don't have any more guests scheduled this week, although I reached out to a couple friends. So again, if you guys have some people, I think Don wants to come on the show. I can see he wants to come on the program. So maybe we'll get Don on this week or whomever. If not, I can always find some things to talk about. I still owe you guys a pattern show and maybe even do, I have a kind of a couple crypto ideas I think might be interesting for you guys. Anyway, that's going to do it for me for today. I hope you guys enjoyed David Warner. If you want to partake in his signature series, you can do so by going to tradingacademy.com or talk to your local center. Let them know you are interested. Let them know you saw it here on the Trader Merlin Show, and hopefully it'll get you signed up for that one so you can learn from David and enjoy some more of these Forex markets. All right, that's going to do it for me for today. Again, if you enjoyed today's show, click that like button. If you don't, great. Send me an email. I think you can send me an email at that name right there, which is tradermerlin@gmail.com, and tell me what you disliked about it. Maybe we can make the show better. If you got guest suggestions, as I mentioned, feel free to try to bring on anybody that you want. You can send them my email, tradermerlin@gmail. I'm looking forward to have almost everybody on except you know who won't be allowed on this program or anybody who works with. Until then, happy Friday, everybody. Or happy... See, I look over here and I see Don says Friday. You want to come on Friday, Don? Let's have you on Friday. We'll do the weekend show. I'll have a cocktail with you on Friday. So I guess we have a guest for Friday's show. That'll be Don Front. All right, guys. That'll do it for me. I will see you all tomorrow. Happy trading out there. I'll keep my eye glued to Ethereum and Bitcoin over the next 24 hours. See you then.